Access to development and bank finance has come under the spotlight at the WEF. Reporter Nompumelelo Siziba caught up with Barclays Anthony Jenkins and got his thoughts on financing and the continent's growth.
Barclays this year is celebrating its 325th anniversary, and we've been in Africa for 160 years. So we're very proud of our heritage here. And our investment in Barclays Africa Group Limited has been very successful for us over the last decade. As you know, we recently brought together all of our African interests into one vehicle in Johannesburg, and we're very pleased with the progress so far.
Now, Nigeria is the most populous on the African continent, and it's also the largest economy on the continent. What is it that Barclays is doing to get a foothold in the retail banking market there? And if there are any challenges, what are they?
So I always think that it's important when you think about going to new markets that you really understand what you're bringing to the market that's different. And in retail banking in Nigeria, it's a very well-served, highly competitive market. So that's not where we would start as we enter Nigeria. We do have a small office there, and we're looking to develop our corporate and investment banking in Nigeria, and we'll do that over time.
And digital technology has played a very big role in the banking industry globally. It's been a game changer. How important is that a focus for you on the African continent?
Well, to use a phrase in the banking world, you ain't seen nothing yet, because all of the technology that's been deployed today is nothing compared to what's coming. And this whole transformational wave of technology is going to revolutionize banking. And in Africa in particular, I'm excited that we're going to be leading that. And lots of things we can develop here, progressively serving the underserved and unserved people within the community, will be things that we can take back into the developed world. So Africa's important to us not just because we can do great things commercially here, deploy technology to help society, but also because we can learn here, which will help our business globally.
There's talk that there'll one day be the end of the traditional branch. So in that case, as you launch or as you expand in Africa, will there be less focus on building infrastructure to actually have customers?
Well, in many ways, if you think about Africa, nobody built a fixed line telephony system here. Everybody uses mobile, which is today's technology. That having been said, I think will always be branches in the foreseeable future. There may be fewer of them because people will be able to do much of the things they do in branches today on their own phone, at their own convenience, which is better for them. It's driven by customers. But they'll still want to go and talk to a person when they want to get a loan, buy a house, think about savings. And they will want to do that in a branch environment. So I still see branches in our future, and there'll be quite a lot of them. But I think progressively, as customer needs and demands change, and as the technology improves, customers will select to serve over mobile devices.
Now, one of the big topics today is about the deepening of African markets so that African countries can use the cash to actually help themselves develop. How best do you think that they can do that?
So I think there's a huge opportunity for Africa, but a number of things have to happen. Firstly, government policy has to focus on developing the right sectors of the economy, be that tourism, agriculture, high-tech, manufacturing, and so on. While commodities are important, there has to be a broader commercial base in the economies here. The second thing, of course, is that the educational system needs to adapt to the needs of those sectors. So that includes skilling, but particularly the development of things like engineering, math, physics, as well as entrepreneurial skills and so on. And then thirdly, the banking system has to continue to innovate and offer products and services that are going to drive economic growth within Africa. And on that third point, of course, it's in our commercial interest to do that because it's a great opportunity. So it will help the societies here, but it's also good business.
And then lastly, Mr. Jenkins, obviously everyone is looking at what's going to happen with Greece. Is there going to be a Grexit and so on? There is talk that those banks that are affected or exposed to Greece will be impacted. And if they are, and they're exposed to emerging markets, we too will be impacted. Your view on that, please?
I think history has shown that in these circumstances, a solution is usually found. So I would say that it is more likely than not that a solution will be found for the current issues in Greece. Were that not to be the case, of course, there would be an impact on the Greek banking system and probably broader on the euro system. For us at Barclays, we have very limited exposure to Greece, so it wouldn't be an issue for us. As to broader contagion, I think the policymakers around the world would act rapidly to contain that. So I don't think there'll be any immediate broader fallout into other developing economies.
State